Well, if you like drama in the stock market, it's going to be pretty hard to beat last week's swings. The Fed crushed the market on Wednesday when they basically said there's no chance of lowered interest rates anytime soon, meaning the rest of this year. And then, of course, that was on Wednesday. Then the big rally, kind of unexpected to me, on Friday when the unemployment numbers turned out to be better than expected, meaning the economy is still chugging along. And the end of the earnings season continued to have the most of the big companies beating expectations and giving good guidance. So all of that was showing a great continuing market for the macro, for the general economy. Even as inflation continues to apparently slow down, all of that seems really good, along with the Fed actually looking like they're going to do a pause. Please understand me. If interest rates continue to go up or don't continue to move slowly down, there is nothing keeping the Fed from continuing to raise later this year. So it's not off the table by any stretch of the imagination. So this is Randy Kirk. If you like this kind of commentary on Sunday night, where I talk about the week in advance, please please subscribe, hit notify, and then join my Patreon. Well, there was zero news about banks over the weekend, and by and large, I would say that that's good news. If you listen to my Kathy Wood video on Saturday morning, her actual video from Friday night, you know that she and Musk feel, and I tend to agree with them, that the greatest risk we have right now in this economy is that the money supply, the movement of money, M2, could dry up, and that there just wouldn't be enough money in the system to continue for the business as usual. This is a real, serious consideration. Go back and look at my video from Saturday morning if you'd like to learn more about what I think. Warren Buffett also chimed in saying that higher interest rates on commercial properties are a threat. That was one of his only major macro comments that he made. So there's only one solution to the inversion on the bond market, where you are paying super high interest, getting super high or paying super high interest rates on the short term, like 2-month yields, 2-month bonds. There's only one way that's going to come down, and the way that it's going to come down is if the Fed starts lowering interest rates. There's not, or if they stop continuing to, if they go back to some kind of quantitative easing, that would also help. But neither one of those things are really in the cards. All right, the biggest opportunity for drama this week, well, other than the various Fed presidents who almost, I think all of them speak somewhere this week about their regions, if not all, most. So almost every day there's a potential for a Fed president to say something that will drive the market crazy. But other than that, the big drama comes on Tuesday and Wednesday, CPI on Tuesday, PPI on Wednesday. What can we possibly expect? Well, the street is expecting a very small decrease in the overall CPI. That could very definitely happen. It could be flat. It could actually be down. It could actually be starting a trend down. As you know, I use a different system. I've talked to you about this before, the trueflation.com. If you want to go look at Trueflation, if you might want to keep that up. If you're very, very interested in this, just keep it up as a tab like I do. Trueflation is definitely showing deflation at this point in almost every sector. So transportation, foods, just go along the list. There's only a couple that are showing a continued increase. Education is one of those. I think the other one might have been transportation, but basically all the sectors are showing deflation. So you could begin to see some serious, drop below the 5.6, 5.5 area that the Fed is expecting, that the street is expecting for this week. Of course, if there's any significant drop in expectations on inflation, that would be a big help to Mr. Market. So what kinds of things do I see in terms of the specifics? Well, oil is down. Now a little buying at those lows of last week. It dropped so fast, so you see a little buying over the weekend. It's back up over 70, but just barely. But that would be an overall, that is a negative. Right now, that should be a deflationary factor in the economy. Almost all, according to Kathy Wood, almost all of the other commodities are down. That should be deflationary. So the 10-year bond rates are down. That should be deflationary. Down, significantly, 50 basis points since like 10 days ago. So all of that taken into consideration, the two markets that I would be most interested in right now in terms of possible inflation, one of those is travel. I would expect, we'll talk about that in a second. Housing is the other one. Everything I'm reading says housing, residential housing is now starting back up again. That should be expected. There's absolutely there's nothing available on the market. There's just no inventory. So it's almost got to go up. So I don't see anything that can stop that during the seasonal between now and September, October, even November of this year. Everything I'm seeing would suggest that's going to be going up. Remember, people get used to these higher interest rates. It is already baked in. Unless they go up higher, people are they're already working around those interest rates. We've seen these kind of interest rates before. So it isn't the interest rates that are going to slow down the economy at this point. The thing that's going to slow down the economy is not having any money. That's the one big worry. All right. And so then Disney is really the only major company reporting this week. I think that'll be interesting to see what Disney's guidance is. The spring season for Disney is not going to be a big piece of evidence in terms of what travel is looking like, but they should be giving guidance as to what they're seeing for the summer. They should already have their bookings in for the hotels and things like that. So they should be able to give us some guidance on Friday with regard to travel. Travel should be a big stimulus to the economy this summer, and we may see prices beginning to go up again. So what about Tesla? Tesla, well, the big question is, will Tesla continue to outperform? So on Friday night, on my Good News Friday show, we talked that this outperformance by Tesla last week was probably due to two or three things. One would be the reintroduction of the long-range Model 3. Another would be the price increases that we began to see, which signaled to everybody that the price decreases are over, that they don't need them at this point, and that people should not be waiting for more price decreases. And then some beginning, I think there's a beginning of an understanding starting to seep into the market that the energy storage business can be modeled. Those things are probably all affecting the stock being on an outperformance place. Also, there was strong reporting in the auto business in general last week, suggesting that auto sales are better this year than anybody would have suspected. Now, I offset that by saying that could be, and Kathy Wood also said, this could be people just catching up. There was no cars available last year, and now they have them. So there could be some kind of a boom bust, well, a bust boom. So we had a bust last year, so this will be a boom resulting from that as people make those purchases that they put off. That sometimes doesn't last very long, and we can see a bust afterwards. So really interesting to watch how inventories build among the major automakers, in particular in the US. Let's see. So my overall suspicion is that all of these temporary situations with Tesla, all of these good news things that came last week have played themselves out, and the street will actually be looking for reasons to take profits. So Tesla's most likely to follow the macro and maybe even be a little bit under the macro, a little bit underperforming. And the macro I'm always talking about, as you know, if you follow my show, I'm always talking about the risky growth stocks. Those are the one, the Kathy Wood type stocks. Those are the ones that Tesla tends to follow overall. The NASDAQ is a good guide. Tesla tends to follow the NASDAQ, but the risky growth stocks, it follows much more precisely. So I've posted a bunch of different potential catalysts on my Patreon, and I'll be doing shows on that. I think it's Tuesday and Wednesday morning. I'm going to be talking about some of these catalysts are market movers for Tesla. They have more catalysts and market movers over the next 12 months. I mean, these are things that are pretty well built in, pretty well baked in, things that are going to happen over the next 12 months. And a lot of them are going to be happening in the next 8 months. So many opportunities for the stock to really catch fire as these different announcements are made and different products are brought back brought into the marketplace, et cetera. So look for information. If you want to go see that right now, you can join my Patreon. It's only $5 a month. And also look for the shows coming up. I think it's Tuesday and Wednesday morning. All that information is below, by the way. I'm showing the upcoming shows, the upcoming episodes, some of the titles, and there's a couple of really amazing ones. Tomorrow, I'm forgetting. I can't, just look. You'll find out what they're going to be. Okay. You may have noticed something, and that Elon likes to pace his announcements so as to keep Tesla in the headlines all the time. He's now starting to do the same thing with Twitter. You may have noticed this as well. This is just more genius in terms of Elon Musk's marketing capabilities. So he hands out these little pieces, these little bits, one on Monday, another one on Wednesday, another one over the weekend, whatever, all these little things. Sometimes he makes an announcement on Twitter. Sometimes it's a more general announcement. This kind of PR, keeping the name in front of the public constantly is really, really, really valuable. And some of the things that he's been keeping in front of the public are things like his interviews that he's been doing recently, which have been absolutely fantastic. So there are many opportunities to give some news over the next week. There's already been some stuff that's been kind of filtering out. Cybertruck alphas are being sighted on the road and testing on the road. That was a minor little thing that went out there, but if there's one, there's more. There'll be sightings. So that could be some evidence that maybe the production will start sooner than thought. Maybe it won't be all the way till September, October before we get the reveal, although that's what Elon said that's when it would be. So, but you never know. Sometimes these things are surprises. He also made a statement over the weekend that FSD 11.4 should actually be called FSD 12 because there are so many improvements on it. That's just another little feed, a little push out there to let the world know something new, something cool about Tesla's going on. So watch for those kinds of releases. Any one of those, you never know which one of those that Mr. Market is going to decide is important. Well, let me know in the comments below if I've missed anything with regard to the macro, with regard to the finance community in general, with regard to Tesla in general, or with regard to Tesla stock. Comments below, like, subscribe, hit notify, check down below in the information. Lots of good stuff down there. And join my Patreon. And it's been great talking to you.